Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so that's COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders and changing their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is testing a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside have been created. At the moment the market tested again this exact same zone, has already started rejecting it to the upside. So from a monthly standpoint, more bullish price action could be created away from this level. So the monthly time frame definitely seems quite bullish. We can also notice, if we look into the most recent price action, that the market here has been creating an inverted head and shoulders. We have the left shoulder here, the head here, and the right shoulder here. We can also notice that from a pattern standpoint, as we have an impulse and a correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and this will show us that we have the 0.618 and 0.786 Fibonacci retracements lining up exactly in this area, therefore creating a confluence of support inside of this zone that we could in fact expect this market to want to reject to the upside. So the monthly time frame as well definitely seems quite bullish. Now let's drop down on the weekly time frame and see what we have. Well, from a weekly standpoint, at the moment we have very choppy price action. We have a market which so far has been moving sideways in this range for quite some time, and this could easily be an accumulation zone because as we are rejecting that monthly support, if this is an accumulation phase, there is definitely the possibility for a strong rejection to the upside away from that historical support that we have just identified. If we go down on the daily time frame, what do we see? Now here on the daily, the sideways price action is even more clear. We can easily notice the high of the range being at this area, and at the same time, we can notice the bottom of the range being at this area. Now, until the market will remain in between these two zones, we can't really expect a strong push to the upside that the monthly time frame suggests. I also spoke about AUDUSD just a few days ago after the market created this M pattern and was here. And from here, I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, at the moment, what kind of structure the market is creating here and where we could be looking for the next potential strong structure shift. Now, before we dig deeper into the technicals here on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on the AUD. Now, first of all, let's keep in mind that if we're looking at the data for the AUD, we're actually already looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, we went from having minus 107.5k net positions all the way up to minus 64.7k net positions. So we have seen a clear increase of the net positions, making AUDUSD stronger. So in the long run, institutions are once again moving back to the bullish side for AUDUSD. We can see, in fact, how they have been increasing their longs that went from 30.5k to 45.5k and decreasing their shorts that went from 145.7k down to 110.3k. So clearly institutions have been moving back to the bullish side for AUDUSD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So from a daily standpoint, only if the market will break above this range, only at that point, we would have some quite interesting structure, because a break above would mean that at that point on the retest, all this previous resistance would become support. And since institutions are already moving to the bullish side, a break and retest of support would increase the probability on the retest to see even more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if the market will remain in this range, or if the market will even break below, there isn't really anything interesting, but a break above would create interesting price action. So what would I expect in that case? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the CO2 data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.